Hey, welcome back to Two Super Guys for Sox. I'm Dylan.
And I'm Vinny.
And are we on the verge of another bank run that is going to cause the economy to crash again, cause another recession? And is there a trading opportunity in this? Yes, of course there is. We're going to talk about it.
Two Super Guys trade stocks.
All right. I think you're going to like this because it involves our buddy Signature Bank.
Oh, yeah.
Yeah.
I love it.
Yeah.
Always excited.
So I'll show the graphs at the end of this, but essentially what's happening, everyone knows March, there was some crazy stuff that happened. PAC-W, which we did multiple videos on, which I swung trade barely successfully. Michael Burry swung trade as well. Closed, and now we have another possible run. Now, before we get into this, just remember, bank stocks are unique in that fundamentals do not matter. If everyone sells a stock, it dies and it gets closed. It's the only kind of stock that is like that. If that happens to Amazon, it's just a great price to buy Amazon. It's not the same for banks. It can just run to zero by everyone short selling and selling everything. Okay? It's odd. But
the Federal Reserve will step in and make them be ushered to another bank to purchase the entire company off the market.
Yeah. Now you're going to think the Federal Reserve here may be lenient on them because that's why they're in trouble, is because of what happened in March. This stems all the way back from March. So regional bank stocks are back in the hot seat. On Wednesday, New York Community Bancorp had a surprise loss of $252 million compared to $172 million profit in the fourth quarter of 2022. They also reported $552 million in loan losses, which was an increase of $62 million the prior quarter. So they're down 38%. They recovered slightly.
Yeah.
Now,
one day.
yeah, not great. Now, what's actually happening? So the poor quarter is a product of acquiring close to $40 billion in assets from the now failed Signature Bank, which was one of the banks during that March crisis, right? It also, because of those funds that they acquired, it put their total assets above $100 billion, which crosses the threshold to no longer regional bank and large bank, which has a whole different set of rules, whole different set of regulations, and it limits the amount of money that banks can loan out, all right? So it changed their internal business model. Let me move my face. So that's a lot of volume. That's a decent amount, right? Not ideal. They're trading at a little bit more than half what they were. They recovered, not really. It's just they recovered slightly from their low. It could easily go lower here. Here's the weekly chart. I zoomed out a couple of years. That's a big red bar.
Yeah. All right.
This green arrow, you can see my arrow, right?
Uh-huh.
So this is the March fiasco with PAC-W and WAL and Signature Bank and all the other one. So you could see the volume they had over a couple weeks. Not even close. We're at the top of the chart here. Okay?
Yeah.
So theoretically, this could go lower. Now, there's also something happening with regional banks as a problem in general. Now, I did a video about 4 or 5 months ago saying that my number one trade for 2024/2025 was finding a bank with the most commercial real estate, because we did multiple videos on how commercial real estate is tanking. Businesses are empty. People are just waiting for leases to expire, with the most leases to expire in 2025. You had, what's that shitty company that just
WeWork?
WeWork. There we go. They went under. It's all a nightmare. So turns out my trade may be screwed here because it was New York Community Bancorp is the biggest one. So
That was the one that was targeted, huh?
73% of its loan portfolio with some or all ties to real estate. Okay?
Yeah.
Now, that doesn't necessarily mean all commercial real estate, but it illustrates why small regional banks are inherently undiversified and, in our view, generally flawed business model. Okay? And also, this is kind of interesting, its loan portfolio includes exposure to multifamily homes with rent regulations.
Oh, yeah. works out well when government regulation artificially tamps down prices in an inflating environment. That makes for sound financial products on the other end of the transaction.
Yeah.
Yep.
Now,
The
it
other
does.
like
Go ahead.
point I wanted to make real quick too is like, do you remember how the Federal Reserve kind of stopped this whole fiasco last year by putting that overnight like lending facility available, where they were allowing them to pledge collateral at face value and get loans back from the Federal Reserve for that?
Yeah.
All right, that ends in March. It was only
Hmm.
renewed for like it was only approved for like 1 year.
Okay. Well, we're going to have to look into that because there's going to be some other companies that, because it wasn't just Signature Bank that failed. I believe they were just the first one. There's another one in San Francisco. I can't remember. I'm blanking on the name of it. It's where Facebook had all its money.
Yeah,
Um,
well, Zuckerberg personally, it was like First Bank or something like that. Yeah.
Something like that. I'll have to look it up. But there is an opportunity here that most people aren't going to know. Also, bank runs. When banks get canceled, people think it's this huge thing. If you look into Google right now, how many banks get bought out or get on a run each year, it's more than you would think. It's just these banks in March had more money than usually the ones that get run out.
Mm-hmm.
So here's the last little interesting part. The ratings agency Moody's warned on Wednesday it may cut the bank's rating to junk. Not that that really matters, but kind of interesting. Now, DPST, all right? DPST is a 3x leveraged on regional banks. So it's not something that you hold long term. It will inherently lose value over time. This circle is March. Okay, so this is when this whole thing happened. We're chilling like $28 all the way down to $5. It's
Okay.
crazy. Okay?
Yeah.
Here is Pac W during that time. You can see that the graph ends in November. That's because they were bought out. No longer a company. Now, here is DPST now. Now, I did this trade already, and essentially what happened is I bought at 40, which you're going to say that's really high. I'll show you. Actually, I should show you this graph. I hate when they do this because it ruined the graph. So this is because they did a split. So they're at like $4 and they split to 40. So just ignore that.
Reverse split. Yeah.
Yeah. So essentially it went up to 80. I had doubled my money and then I set a stop loss. I was just going to let it run and I got stopped out at break even. It then went up to 110. So there is an opportunity to trade these when there is crazy over emotional selling and hopefully a bank run. I should never say hopefully a bank run.
Potentially, he means.
Potentially a bank run. You can see we're still above the 200 moving average. Doesn't matter a lot for 3x leverage stocks, all these lines. But for me to go into this, I would like fours. I would like your 48, 46. I want to break this line down here. Okay. All right. And here's just showing you how big this fail was. Oof.
Yeah.
Not great.
So you're looking for the reversal. You would take the trade in the mid 40s with a plan for reversal to take a tight stop loss. Is that your idea?
Yeah. It's you try to do a trade where you limit. I would rather break even than lose, so my risk is quite low. So during that DPST trade, I actually had like 3 or 4 that just all went to break even because it would kept on, nicking me out essentially. Here's KRE, which is not leveraged. Okay. I don't think this is worth it. There's been a lot of stuff on like Reddit that is this a buy after this week. You're looking at like $3 and a lot of risk. It just does not seem worth it to me at all. So
a little asymmetric risk reward ratio there is kind of what you're looking for.
Yeah, you can make a lot of money on DPST if it works out well. I've done it a couple times where it's worked out well and a couple times where I just break even. You do not. You have to have a tight stop loss for these 3X stocks. This is not a good idea to mess around with, especially if you've never done it before. And this is not something, there are people that are like holding on to this for a year. You do not hold on to this. That's not something that you hold on to because it degrades over time.
Mm-hmm.
It's a bad idea.
The cost it takes for them to run a triple levered fund eats into the like any potential profits very quickly. So you cannot hold that for long term.
Yeah.
The one kind of point I would make here is that we're in a position right now where I haven't really heard about this significantly. So
Hmm.
we're either it's a very small non-event and it will not have any potential as far as like kind of making a profit here, or th- this is still very very early, and you do have the potential to have like a knowledge advantage here if you kind of research this more. I think it's an interesting idea because like you could be an early mover on this.
Could be an early mover, but here's the issue. This is a big drop. Look at the volume difference. Not even
Yeah.
close. It's not getting anywhere near the same attention. Like this. I mean, this is 10 times the volume than what it was over here. So
Hmm.
it's just, I don't think it's close enough. I think we need something else to happen. I think we need a couple
Yeah.
more regional banks to report earnings and then have a little bit of a rough time. I still think that finding a regional bank with a rough commercial real estate portfolio could be a wonderful, I shouldn't say wonderful, could be a profitable trade for whoever is
Yeah.
shorting it. I don't want to be a dick.
Especially with like that, I was saying that Fed funding facility running out
Mm-hmm.
next month, that could put a significant amount of pressure on this thing. So, although it may not be a trade now, I think regional
I think it's
banks is
like
going to be
six
some
months.
trading action over the next couple months.
Yeah,
It may even be shorter term than that, I'm thinking. So, yeah,
good.
start paying attention to them again.
It's something that we got to find someone's portfolio with commercial real estate specifically. I'll link the video where we looked at it and showing how bad commercial real estate is doing. It's not going well because of the whole work from home movement. But all right,
Mhm.
guys, let us know what you
Catch you
think.
next one.